Hi, Brian. We finally got it, huh?
Finally, yep. Yeah, I don't know. That's the last email. I just got the link. So if you sent it before, I wasn't getting it for some reason.
Yeah, Yahoo is pretty slow. But what do you want for free, right? I'm using the free version of Zoom.
Sure.
Yeah. So
Yeah.
welcome.
Even,
Good,
yeah.
good to have you here. So you got some new optimistic thoughts about the charts?
Yeah. So I put together a PowerPoint, and I think I got some interesting anecdotal evidence that's going to show that we are right on the cusp of something big happening in both gold and silver market.
Okay, let us have it.
Yeah, I got to figure out. Let's see if I can share my screen here. Okay. Put this in.
Yeah, that's working.
Okay. So, yeah, I've been doing this for 35 years, and I got to tell you, I can't recall as being excited as I am right now with some of the pending technical aspects that I'm seeing in both gold and silver. So, when we had our first interview last year, this is the chart pattern I was tracking. This is a daily line chart. So I don't typically use the high, low, close, and open or hollow candles. I like to use a line chart, which is just reflects the closing price of the market.
Mm-hmm.
And this was almost a textbook example. I'm not sure exactly where we were last year, exactly what, how completed this particular pattern was. But I know that we were talking about this in our interview last year, and I was looking for this thing to really take off once the pattern is completed. So this is a daily pattern. This was kind of mapping out with something that gold was doing, kind of a similar pattern. So the zero wave here was back in March of 2020 when we had that COVID scare, and we tanked right down to around $12. And then shortly afterward, 3 months later, we had a very nice impulse leg up to 30. And then we started making this real nice space, lower highs, but everything was being contained in this triangle pattern. This is like a descending continuation pattern. And after all the turning points here from A, B, C, D, and E, this is kind of what I look at for turning points in a triangle pattern. I expected it to, break out above that upper resistance line and take off. Okay. That didn't happen. But I had high probabilities that this was going to happen because the way this chart pattern was laid out, we completed all the criteria for the pattern. So then, do you have any questions on this slide, Louis?
No.
No. Okay. So here's what actually happened. We never did hit or break through that upper trend line. And then the market sold off, started breaking key support, and then we broke through the base at about $22, and then it went all the way down 18. We kind of did a double bottom in there, triple bottom. And then the market started to rally back up. Okay. So I went back and looked and said, well, this is kind of weird. Why, so I reflected and took a look at the bigger picture and see what was going on. So I was looking at different time frames, and this is a monthly line chart, and this is a 20-year chart pattern. I've dated this all the way going back to 2003 when silver was trading somewhere between $4 to $5, and then we started to see a rally of series of different highs. Eventually, went from that low that in that pink area there, we hit around just below $9, and then shortly within about 18 months, it rallied up to $50.
Mm-hmm.
I'll talk about these colored bars here on the next slide, but this basically just shows what the market is doing right now. We hit, looking at in 2011, when we hit 50 bucks, I'm looking at as a primary wave one. This is more related to Elliott wave. Then we came down, took several years. We hit lows here in 2015. It went sideways. We hit a low there, wave A. I was around 13, 14 buck area. Then we had that rally up to 30 and bounced around there. And then we declined all the way back down to wave C. That was around 17 and a half bucks. We rallied back up to 25, and then we pulled back since then. So right now, this chart is up to date. We're at 23 bucks. Question is, have we seen the low for the wave E? But wave E may have already bottomed, or we might get a retest of around 21 bucks or so. But if we break that upper trend line, where wave D is sitting at 25. So once we break the $25 area, this should prove that wave E is in place, and we should really look at busting out of this pattern pretty hard. Now, going back to why we failed here is when you look at wave D here on the pattern, and we went all the way down to 18. This actually coincides with wave C for the bigger chart pattern. Mm-hmm. So the bigger chart pattern, takes precedent, and the market had to come down, hit that wave C turning point, and so that's why we saw a failure on the daily chart. Okay, so this is a very large symmetrical triangle pattern in the making for 20 plus years, and the two trend lines now are converging, and you can see that as we move forward in time that there's not a lot of price space remaining before we're going to see a breakout one way or the other. And because the previous leg from wave 0 to wave 1 went from 4 to 50 bucks, the higher probability is that this will break out on the upside.
So we can see where the breakout to the upside would be somewhere between 23 and 25, but you could still be in the wedge even if you went down to about 21?
Yeah. Now I'm using 21 just because that's a Fibonacci. If I take a Fibonacci retracement between wave C and D, and I take that net advance, 50% retracement of that, which is typical of a wave E for any triangle formation, would take us down to 21. I think the lowest we've hit here in the last few weeks has been right around 22 bucks.
Yeah.
So we've seen a bit of a bump and rally both in gold and silver. We could trade there for a couple more weeks, between 23.50, and then one more hard dive down to 21.
Yeah,
that would be perfectly fine, But the low could be in right now. One of the reasons why gold sold off, which I don't have on this chart, but as it was making a series of highs, between 1950 and 2080, the relative strength index was not confirming the highs. The relative strength index was actually making lower highs as the price was making higher highs. And I look at that divergences in the market, either for tops or bottoms. And so we were seeing negative divergence with the relative strength index, and that was a warning that the gold market is going to sell off. It had to alleviate not just an overbought condition, but the fact that we were seeing negative divergence in the market.
Right.
So,
and the 10-year yield has been spiking higher, and the Fed obviously going higher for longer. That sure hasn't helped anything.
Well, that's true. Interest rates are and the Fed jawboning of higher interest rates have been kind of keeping a lid on, on prices. But I think irrespective of what happens with the rates, some major news event or some trigger is going to occur, and that's going to line up with the technicals. Typically, what I've seen with these chart patterns, when you have a viable bona fide chart pattern, is that the breakout is coming. You know that the breakout's going to occur when all the turning points have been completed, and market will just coincidentally time itself with some news event. The news event is going to happen, and it could be anything. It could be something that we're aware of, or it could be something unforeseen. But the market, basically, from a technicals perspective, is just looking for that one piece of news, and then everybody kind of justifies, oh well, that the news actually moved the market, and that's not really true. The market's just waiting for that news to come out, but technically it's going to happen. And that's why you see sometimes when markets move strong in one direction or another, the news could be bullish, or you might view the news as bearish, but the market still continues to advance in a bullish manner, because it'll interpret that news how it wants to. So this is going to happen. We are going to see, I think, a major breakout to the upside. And the question is, what is the news event that actually causes the trigger? But it will time itself with the breakout. So keeping in mind that this is a monthly chart, and so that because we're using a longer time frame, it's a little bit more difficult to say, to pinpoint exactly from, a daily or weekly perspective. Okay, if this was a daily chart, the time frame would be a little bit more focused, or be able to pinpoint that a little bit better. But being a monthly chart, we have to, take into consideration that this is a longer time frame, and it could take an additional few weeks for this thing to manifest. Okay.
But it looks like it could take, even if it stays within the wedge, it could even take a year, right?
No. No, just because I'm looking at the price action where, yes and no. But once the wave E has been bottomed at around 21, typically, it could go do another Fibonacci retracement. The next one would be 61.8%, but we're so close to the bottom right now, and the way silver moves, wouldn't take much for it to go from 23 back down to 21. We could see that within a couple of weeks.
Yeah, and that's very consistent with what I'm thinking in terms of if there is a liquidity event and the stock market starts its corrective phase, I would hope silver would base above 21. If it got really horrible, then I suppose anything could happen. But I think 21 is a really good target if you're trying to save every penny you can. So I think that's consistent with my thoughts.
Yeah. Okay. Now I want to go to this other chart. This is the same chart, same time frame, and I'm looking at short-term target of around $65, $66 for silver. What I wanted to show is the colored blocks here. I'm looking at this kind of ties in with a triangle pattern, but this is kind of separate as well. This is kind of what I've looking at a fractal comparison between how we had that explosive move from 2008 to 2011 when it went from basically $9 to 50. This green block here that I've labeled 1, we see basically 5 waves here. And we had a nice strong rally up to $20. And then we had a a sharp decline down to 10, then another rally advanced back up, went sideways for a few months, and then we just exploded to the upside. And we did a little chart pattern down here, right at the bottom of where you see that horizontal purple line. There's a little chart pattern there. That was the first leg up. And we did a similar one here. If you go over to 1A, the green block here, this is where we kind of did a little double bottom pattern. We based here. We had a strong move up to 30. And then the 2A, the pink block here, we had followed immediately by a sharp decline. And now we've regained some of that in that purple block. And it's very similar. The 2A is very similar to 2 on the decline. And then we snapped right back on that purple block 3 to 3A. And and the only thing that's keeping it under in that 3A block, the only thing keeping it from advancing further is that upper resistance trend line. So now the question really is, looking at these fractals between 1, 2, and 3 and 1A, 2, and 3A, this is showing me that, we could be on the verge of a very explosive move to the upside. What is also interesting is the horizontal bars for each of these. The green, the 1 to 1A, is exactly the same in time duration. So I measured the low to the high for the first block 1 to the second block 1A, and that's what that horizontal bar represents, is that from a time perspective, these are actually the same amount of time. So when I drew out this when you look at 2A and 3A, that pink horizontal bar represents the same timeline for 2 and 3 when it went from $10 up to 50. So I'm not saying that we're going to see $50 within the next few weeks, but basically what the pattern is saying is that we're running out of time. And for this thing to manifest, is there's very little time on the horizon, before we see a breakout. So this thing is going to break out big time. It's going to happen fairly soon.
Great. And of course, that could be a sizable breakout, or it could be a sizable breakdown. I guess whenever it pokes its head above or below your triangle here, look out either way, right?
Yeah. Well, the probabilities point to the upside, not just because of this pattern and where we are technically, but typically when you see you use the first leg, which in this case went from $5 to 50. That's wave 1, and then it digested over the last 10 years. It digested those gains, and now we've completed this pennant formation, and the upper and lower trend lines has been basically where the market's been trading. Now, I did a little bit of analysis, and if we, on the far left here, we look at a fib extension of 1.382, where this market hit on a closing basis 47.80, we get $66. One of the other things I do for target measurements is I take the net advance from 0 to 1, which is about $43, and I add that to the bottom of wave E, which is, if it was 22, we'd see about a $65, $66 gain. If you take the percentage of 2.39 times 28, that's where we get 66, and that's very similar to the 2.39 times 20, where we get 50. So I've calculated three different methodologies here, which I'll point to short-term target of 65, 66 bucks.
That's
So
amazing. Amazing. Where would gold be if we hit $65 silver?
I'm thinking gold is going to be around 35, 3,600 bucks.
Wow.
And I'm using just quick and dirty the GSR. So, but this is really the minimum kind of target, and we could go to 65 and then maybe come back down to 50. But we hit 50 twice before in the last 35 years, 1980 and 2011. So the market might surprise us, and we might blow through 50 pretty quick, where everybody's expecting we're going to hit 50 and then back off, or maybe actually turn and go into another cyclical bear market. On the other hand, with the market being so powerful in this next advance, what I'm expecting is we might rip right through 50, go to 65 or some other Fibonacci extension. And then when we come back down, 50 would be acting as the support level.
Yeah, so I would think anything over 30 is going to bring all the speculation in. I mean, everybody's going to be buying silver when it's over 30.
Well, yeah, you're right. We see that typically when silver starts to run, it really attracts a lot of speculation. New buying comes into the market, and both physical and in futures, or the SLV and the PSLV, where we could see a lot of money coming into those markets, which will push it a lot higher. So there's a lot of here to kind of digest, but we're looking at completely two different types of methodologies. Here is the fractal, where we're seeing what happened, what was the price behavior occurred before we saw this parabolic move in silver, and then what does the price behavior look like now, and does it correlate to that 2005 to 2008 before we saw that explosive movement? In my point of view, yes, we're on that verge, which then also lines up with the huge symmetrical triangle pattern, which typically the next leg would be wave 3. When we finish this symmetrical triangle at wave E, that actually completes a larger wave 2. So now we're going to be advancing on leg 3 or wave 3, which from an Elliott wave perspective is the most powerful wave out of the 5-wave advance. So you've got wave 1, 2 is corrective, 3 is an advance, 4 is corrective, and then you have wave 5. And out of the 3 advancing legs, 1, 3, and 5, wave 3 is the most powerful. Okay, so what I also got, I just wanted for a reference for your viewers, you can Google this, but this kind of gives you just a reference of a little bit of information of triangle symmetrical pattern, and some of the characteristics and what the probability is of it advancing to the upside.
What did you say that probability was in that example?
Well, the probability is, it's a little bit subjective, but I would say, probability of it breaking out to the upside is probably 75% or better.
Oh, okay. I'll take those odds.
Okay. So now we go back to gold. And this kind of supports the case for silver. So if you go back to, 2011, you see where we hit 1920, and that's where I'm marking wave 1. This correlates to when silver hit 50 back in 2011. And then gold had exactly a 50% retracement, came back down to 10,050. And then it started rolling back up. And then we've hit, back in 2020, we hit 2,000 again, or a little bit above 2,000. Then we had that corrective phase down to wave C, D, and then E. So I'm looking at a big picture here for gold going all the way back to 2011 of this doing a large ascending triangle pattern.
Mm-hmm.
Some other chartists are looking at cup and handle, and that's fine. Sometimes you see several patterns within the same pattern, or the pattern can provide, just a different look. But the point here is the cup and handle also is extremely bullish pattern in addition to the ascending triangle. So this is where gold has hit that 2000 mark area several times. And again, you see the bottom trend line where there's just not a very big price target or a lot of space left for the market to move. So it has to break out one way or the other, and then everything is pointing, to the upside.
And what would the lower boundary on that wedge be? Is that like 1800?
I think that would maybe be about 1850. You don't see wave V go all the way back down and touch the bottom trend line. There's a couple of reasons for that. One is wave V typically, because you're so close to a breakout, wave V it is more shallow in its corrective nature. The second thing is that upper trend line, which is very severe resistance for the market, with wave E having only a shallow downturn, it musters up a lot of power. And then that not being that far from that trend line, all that power and energy allows the market to blow through the upper trend line in a big way. So wave E typically does not come back down to the bottom of the trend line. Maybe some traders or investors are looking for that, when they trace out these type of patterns, and they're hoping that the market will come down, hit that trend line, and that'll maybe be a buy entry for them. It doesn't come down. Typically, it will not come down. I'd be suspicious of the pattern if it came down and actually hit that trend line. So there's gold, I know, broke slightly below this week. I think it hit like 1892, and then it completely reversed within minutes, started trading back up to 1910, 1915. So they took it below 1900 on an intraday basis, but they couldn't keep it there. And now we're back up around 1925 or 1930. So, but the other thing I want to show with gold on a shorter time frame, and this one here, this is a reference for a triangle ascending pattern. So this kind of provides some, additional behavior, like I showed with the symmetrical pattern, exactly what the behavior and price action looks like for an ascending triangle, which I believe gold is tracing out since 2011. Oh. This is, go ahead.
Oh, my screen changed for some reason. Can you still see your screen?
A second.
It's, I think we're probably getting to the end of our time limit here. Let's see, maybe.
Yeah, I'm showing the screen is still. Sure, you can't see the screen right now.
No, it's trying to get me to buy Zoom. So maybe we should start wrapping up. But that is very, very good information, and pretty consistent with getting through the summer or getting into the summer and looking for maybe one last opportunity if people want to wait. And of course, if you already have a big old stack, then you just wait for the fireworks.
Yeah, I had a few other slides. I can send. I'll send you the PowerPoint, Louis, and you can take a look at it, because I did want to show the bull flag that gold was making. That pattern is completed, and I think it's ready to take off on its next leg. Also, I had a chart for the GSR, which also shows the head and shoulders pattern, which points to the GSR going all the way back down to the low teens. And then some of the different drivers that could trigger this market. But anyway, to your to your point, I think time now, as far for those that are looking to stack, take advantage of the fact that we're still in the low 20s, because I think something within the next month or 2 months is going to transpire. And once the market breaks out to the upside, I don't think you're going to get a chance to come back and buy physical silver or gold at these prices.
Yeah, gotcha. Well, if you'll send me those charts, I'll put them into the video so viewers can take a look at those. I'd be very interested in the GSR chart. In my wildest dreams, I haven't thought of that going back to 16, but that sure would be nice.
Yeah, sure.
Well,
okay.
Thank you. Thank you so much for coming on and providing a little bullishness. We're all getting pretty bearish out here, so that this may be just the antidote for that.
Okay, sounds good. Well, thanks for having me. Enjoyed having an opportunity to chat with you and present a little bit of charts to your viewers, and hopefully they could take advantage of that.
Thank you so much, Brian. Okay, you have a wonderful weekend.
All right, you too. Talk to you later.
All right, bye-bye.
Bye.